Welcome to Tech Earnings Breakdown. I'm Alex. Microsoft's Q1 FY 2026 beat estimates with AI-driven growth. Shares dipped on spend worries. We'll hit the numbers and takeaways. Let's jump in. We start with the headline. Microsoft posted total revenue of $77.7 billion, up 18% year-over-year, beating Wall Street's $75.4 billion forecast. Non-GAAP earnings per share hit $4.13, a 23% jump, above the 3.67 estimate. Net income was $27.7 billion on a GAAP basis. The Microsoft Cloud segment led the charge at $49.1 billion, growing 26%. Azure specifically surged 40% thanks to booming AI workloads. However, CEO Satya Nadella noted ongoing capacity constraints are holding back even more growth. One huge standout is commercial bookings. They skyrocketed 112% to nearly $400 billion in remaining performance obligations. That is future revenue locked in, with an average 2-year duration for quick conversion. Copilot adoption is broad across enterprises with 150 million monthly users. Momentum is strong, driven by AI usage at scale. But hold on. Imagine what this means for the future. Let's zoom in on how the business broke down. We now dive into the segments. Productivity and business processes delivered $33 billion, up 17%. This is powered by Microsoft 365 Commercial Cloud at 17% growth, and the consumer side at 26%. Dynamics 365 rose 18%, and LinkedIn grew steadily at 10%. Intelligent Cloud was the growth beast at $30.9 billion, up 28%. Azure's 40% leap stole the show, amid AI demand from over 80,000 customers via Azure AI Foundry. More personal computing, $13.8 billion, up 4%. Windows OEM grew 6% and search ads rose 16% with Bing AI. Gross margins came in at 69% overall, with cloud margins at 68%, down slightly from AI scaling costs. However, operating income still climbed 24% to $38 billion. Wow, that's a mixed bag across the board. Cloud's on fire, but consumer tech's cooling off. So how does this fit into the bigger picture? Let's put it in perspective. Revenue growth accelerated to 18% year-over-year. Azure's 40% growth underscores AI-driven momentum, outpacing major peers. Shares fell about 3% after hours to roughly $529, mainly on capital expenditures surging to $34.9 billion for GPUs, data centers, and AI infrastructure. One big reveal from the call: they closed a new deal with OpenAI, extending partnership rights through 2032 and locking in $250 billion of future Azure commitments. That is a game changer for revenue stability. Analysts stay bullish, calling this an AI inflection. Microsoft highlights agentic AI, copilots as the next step for real-world use. Now, guidance. We turn to key future guidance now. Q2 revenue is guided at $79.5 to $80.6 billion, implying 14%